I'm Ellie Toko. I'm the president of the Roundtable, and again, we're really glad you're joining us this evening. Tonight marks our first in-person panel event since the onset of COVID, and we're really hoping that we're going to do these every month on schedule as we did in the past, because as you all know, networking is a very important part of what we do, and it's pretty hard to network over Zoom, and we're all very tired of Zoom, at least I am. So again, I want to thank our sponsors. They have a broad group of dedicated sponsors who really help us out executing our events and are helpful in presenting ideas to us, so we're really thankful to have them on our staff. And this evening's event is our 5th all-female forum in honor of National, or International, I should say, Women's Day. We're excited to host this panel of notable women from the alternative investment industry, and they're going to share their views on a variety of topics. And I'm going to just introduce our moderator and let the lovely ladies speak for themselves. So tonight we're fortunate to have Susan Webb. Susan is the founder and CEO of Appomattox. In this capacity, she is a member of the investment committee responsible for identifying and evaluating managers, as well as managing portfolios. Prior to co-founding Appomattox, she was the head of First Atlas Capital, Inc., the SEC-registered advisor of Atlas Capital, a multi-billion-dollar global fund of hedge fund managers. She's a member of the Global Investment Committee and launched with Weston Capital the Weston Atlas Manager Seeding Program. Susan is a board member at GTI Capital Group, an investment firm focused on opportunities in India. She does not receive compensation in connection with GTI Capital or any other outside business outside of Appomattox. Ms. Webb is on the board of High Water Women, a nonprofit foundation that encourages financial education of women and youth, as is several other members of our panel tonight. She is also on the advisory committee and board of Catalyst Financial Partners, a group that promises small and emerging managers in the investment industry. So with that, I'm going to turn things over to Susan, and she will introduce the rest of our panel and kick things off.
All right, well, I have a loud voice. Can you hear?
Yeah.
All right, great, thank you so much. Thanks. Great that you're technically savvy. I appreciate that help. Thanks so much for having us here today, and it's exciting to see so many faces after so long. Share a view around Zoom at the current moment. We have a great panel here tonight, and what I think is really interesting about this panel is each of these women have a very different business that they're associated with and a role that they're accomplishing, but every one of them has been really, really impactful for women in the world, for diversity, for recognition of talent, and we're very pleased to have everybody here today and healthy. So we're going to start with Cynthia Burgess, who is the CEO of both Tigert Financial Partners as well as Rise. I'm going to let her tell you a little bit about what each of those companies do. They're both woman-owned, disabled companies. One's an investment bank, one's a prime broker, and so she'll tell you more. The second person we have today is Anna Snyder. Anna is the head of manager selection for wealth management for the Bank of America, and that means helping to allocate over $70 billion. So everybody be sure to give her their card. I'm just going to give one more shout out here because Anna is the head of the board of High Water Women, and that is an extremely important role for both impact, ESG investing, as well as financial literacy in New York, and we're always looking for volunteers for that literacy program. And you might hear this ad again. Finally, at the very end is Caroline Lovelace, and she is the founder, CEO of Rose Hill Park. She's right now working on modifying her corporate structure, and she's doing really interesting things. Caroline's worn a lot of hats in her career: private equity, seeding and selecting hedge funds. And so she comes to us with a wealth of knowledge in the alternative space, and she'll let us know what she's looking at doing right now. Why don't we start with Cynthia?
Thank you so much. Good evening, and it's a pleasure to see everyone. I'm Cynthia DeBartolo, and I started my own firm, Tigris Financial Partners, which is the nation's only disabled and woman-owned investment bank, broker-dealer, and research provider in the most unorthodox way. And then went on to create the nation's only woman-owned prime broker this year, called Rise Financial Services, where we have a very digitized cap intro program that we are now making available to emerging managers on an incredible basis to see that they're successful. A little bit of my background. I was in the industry since 1983. I started way back when as institutional credit analyst for Bear Stearns, went on to become a lawyer for Merrill Lynch, the compliance director for Smith Barney, the risk management director over at Citigroup. So if you fast forward my career from the 80s to 2009, we are in the height of a financial crisis. Citigroup stock is plummeting to $1, and I was very sick. I knew something was wrong. But you see, there weren't a lot of women at my level that I could go to and say, hey, I have to take some time off and find out what's wrong. Because the culture was really toxic. You see, back then, there was always some guy ready to jump in your chair. So I made a decision that nearly cost me my life. I kept my head down and my mouth shut. And by April of 2009, I was diagnosed with advanced squamous cell carcinoma of the head and neck. I was given less than a year. I had to have radical surgeries. I had a tracheotomy, a mandibulotomy to split my face, a radical neck dissection, and a glossectomy to remove my tongue. I did not speak for 2 years till tongue was reconstructed from both my arms. I had to learn to function again. And during that time, not only did cancer take my tongue, but it took my career. I was told that my disability was too difficult to accommodate. You see, Wall Street is difficult for a woman. It was damn near impossible for a disabled woman. So I took my years of education, my experience on the street, and my tenacity. And I went to the SEC and FINRA and filed for the nation's first disabled investment bank, broker-dealer, and research provider, and aptly named the firm Tigris Financial Partners.
It's a moving story. I heard it earlier, and I'm always impressed.
Built the firm, and today we're 80% of our workforce are women, African American, Hispanic, Asian, and disabled.
My path is somewhat more boring than that. Yes. But that's an amazing story. The fortitude. Yikes. So I started my career at the Fed right out of college and did the jumping from Wall Street firm that was getting acquired or spun out. So UBS, JP Morgan, any one of the big firms I have worked at, except for Citi, actually. And arrived at U.S. Trust, which was owned by Schwab and just about to be bought by Bank of America after the crisis. So I've been at Bank of America for 18 years. The first decade of my career was risk management, actually, and then I took those skills and leveraged them to start to educate portfolio managers, so I work on the wealth management side of the business, on how to allocate to hedge funds and private market. So that's how I started in sort of the buy side part of research. As Susan said, I now run manager selection across all asset classes for sort of the wealth management arm, so what used to be U.S. Trust, a little firm called Merrill. And so my team oversees north of $3 trillion actually in assets, of which 70 billion is in hedge funds and private equity, private market strategies. And yeah, I mean, my career has, we'll talk about this in a little bit, it's been a pretty standard career, but a little bit different sort of than your normal buy-side career, sort of coming from the risk management side and leveraging that on the buy side. But I'll talk a little bit about that later on.
Caroline? Caroline? There's a button. It's on, okay.
I think my start in finance is even more traditional. I started from an economics major in college to investment banking. But one thing that I kind of learned by accident is that sometimes you have to decide what you want and how you might, and a path to get there, but don't think about how hard it might be. So when I was graduating from college, I decided I wanted to work in London. I didn't know that was hard. I just said, well, I figured out a way to get a work permit. My dad worked for an airline at the time, and I could fly over to London to interview, so I got in touch with alumni and got some interviews, and ended up at UBS for 3 years. Came back for business school, and ended up again back in investment banking like a lot of people. So on the sell side, I got to the buy side completely by accident. There's a woman who, they needed somebody in Morgan Capital, JP Morgan's buy side division, and she called up and said, well, you've got the experience in FIG, would you like to come down? And I said, yeah, I mean, I really like my clients, and it's kind of, and they like me, and I really enjoy it, and they're like, and friends of mine said, you're insane. Like, how is it possible that you don't want to go to the buy side? Ended up, so literally she calls me on a Sunday and says, I'm waiting for you to say yes. And I said, okay, I'll do it. And my friends came by who were down there already and said, you know what, just let me know when I can tell you I told you so. And so I think sometimes you just have to make yourself available to those kind of opportunities and just figure out a way to get there. Rosal Park, our focus is on emerging managers, both seed and acceleration capital, hedge funds and private equity, always with niche strategies, and always with a focus on diverse managers. And so I've been looking at this space for more than 15 years, and we were talking earlier about how the opportunity set that we see today is amazing. There's more investor appetite and allocator interest in this space than I've seen in all that period of time. And we're excited to start building out the platform to not just with alternative seed and acceleration capital, but been joined by 2 new partners, as well as next back office and analysts and so forth to build out a multiple products platform, all based on DEI products. So long only, VC. So we're starting out, but you know what? Don't tell me it's hard, because we have a path to get there.
Very exciting stuff going on with everybody here. We're going to have a little bit of a survey, and we're going to ask everyone to step in with comments. The first is of you women. How many of you felt that you had a mentor, either partially along the way or did not have a mentor, or as some people brought up, someone who really visibly tried to obstruct your progress in your career? Why don't we start with Anna?
Sure. So, I mean, I've had some mentors along the way. I think I started with more of a sponsor, as the distinction is often made. Lisa Shallon, who's now a senior at Morgan Stanley and had been at AB, did a stop at Merrill. She was the CIO for a bit. And she really she met me like one time and then said, I want you to come run this team. And, I sort of, like you, was like, oh, I sort of like what I'm doing. I don't want to go run public equities. I like hedge funds and private markets, to be fair. But you didn't really say no to Lisa Shallot, if you've ever met her. But she was the first, probably the first person who just said, tagged me and said, you're the person that I want to come run this team. And I think I didn't really get the value of mentorship, right? So that much. And I had, people who were supportive, but I actually now have two mentors. One is a white guy in his 60s, and the other is a CEO of a large asset management company who's a woman, and who are absolutely have sort of changed how I've seen my career and what I'm considering and what next steps I should be thinking of. So that's been really important. I think I very late learned about how to select and think about mentorship. But I certainly, of course, have had any woman in this industry and plenty of men too, but have had people who have tried to obstruct on the way. I mean, before I got this job, I was passed over for someone who had never done buy-side, a day of due diligence or buy-side analysis. It ends up that he ended up being a really good manager and leader and taught me sort of soft leadership skills and management skills and thinking about not like an analyst, but actually someone who could communicate to people who didn't write 40-page memos on a consistent basis, and that's a value, I will say. So it actually ended up working well, but I was so devastated when I was just not even interviewed for a job that I had been being groomed for, because I don't know if it was because they thought I was young or a woman or both. That normally goes together. You don't often see sort of the young plus male thing being a reason, but young plus woman is always a valid reason in this industry. We need to sort of stop that. Anyway, and I'm not that young, by the way.
You talked a little bit about your path, but if you wanted to give some more specific examples, that'd be great.
It was my first job when I realized I couldn't count on anybody to open a door. I was at Bear Stearns and was waiting to get my credit training, and I watched a sea of men going, young graduates out of college going before me, one after the other. And I actually went to the partner I work for, and I said, I'm here month after month, and I need my training. And I said, why did you hire me? And he goes, I hired you because if I have to work with someone 8 hours a day, that better be easy on the eye. That comment, I didn't walk away, I ran. But I have to thank him because I applied to law school. Because I realized I needed to have a serious set of skills if this was the culture I was going to be dealing with. And to be honest, I never had a mentor. And I actually hate the word mentor. You need a sponsor. A mentor talks to you. A sponsor talks about you. I don't need anyone else talking to me. I need people who want to talk about me and open up opportunities and bridge those opportunities. And because I didn't get it, I make sure I do it for other women and minorities. I don't care if it means giving them a client, helping them with a revenue opportunity. I think that it's my commitment to pay it forward, even though I didn't get it. So, the experiences, I think, colored my commitment to try to make a difference for other people.
I think that's really moving, and thank you for sharing that with everyone. Caroline?
I think that's really interesting when you talk about sort of the link between a mentor and a sponsor. And I frankly think that we need people who are both in our business, particularly when you're starting out. There's one guy who decided to give me this job in London. It was just one guy who he carved out a role for me that didn't exist before because he was both a mentor and a sponsor for me in starting a business. And certainly the woman who gave me my first buy-side job, and I should say her name, Meryl Hartsman, fantastic person, and I learned a lot about how you navigate and walk into a room as the person who says not a word for 3 hours and then says, oh, by the way, I have a question, and the whole room stops. Because and have that sort of confidence, but also be prepared. But I think we were talking about sort of, particularly the first thing that pops in my head about the mentor and the sponsor is my last buy-side boss at JP Morgan before it was bought by Chase. And this guy, Howard Powers, he really didn't know what to do with me. It's not that he hadn't worked with women before, but he just kind of wasn't really sure. Like, I don't know her, I started to get to know her, and he was just kind of, he didn't know what to do with me. But I really appreciate, but he said, well, I'm going to find out what she wants to do, what her skill sets are, what she's not great at, I'm going to find her resources in order to get better, because I believe that she can be a real benefit to this group going forward. And I just gotten promoted, so I needed that person, and he was new to the group. And when you talk about having people talk about you, not talk to you, I was told a story by one of my colleagues at the time. We were the same first-year VPs. And he said he'd been out with this boss of ours, Howard, and somebody had spoken to Howard and said, oh, Caroline Lovelace, she just gave a presentation to our group. She works for you? And Howard got, and my friend said, oh, she got all pumped up. He said, yeah, she's on my team. So I think that the best mentors and sponsors I've had are those kind of people who want to help you get better, but at the same time don't want to get in your way. They see their success as reflected in the fact that they chose you and they gave you those opportunities. And there's ego on both sides, but I think those are the people that are the most helpful and the most interesting. And he was a reference when I raised my first fund. So those are the people that you need that kind of speak for you, and I to look for them.
Yeah, I would just add to that, if you have a manager who doesn't operate with the fact that having amazing people on their team actually makes them a better manager, rather than, that they're there to sort of lord over and take all the credit, leave. That's not the person you want to work for. Like, mentor, sponsor, it's just not the boss you want to work for. Especially if you're a woman, I would say. But, yeah.
Well, if you're anyone, actually, nowadays. We were going to ask people about how it was to raise children while you're advancing your career, but no one on the panel other than myself had any kids. I can just say it was hard as hell. I will give one shout out to my husband, who's very good, and that's what made a difference. The next question is, do you think that in your career you want to share with people here a chance of a business that you might have won, or a promotion you think you deserved? I know you talked a little bit about it in your path, or a promotion you thought you deserved that you didn't get because they passed you over for a man. Anna's example was excellent. But I think it was a little bit of a bad thing, but a good thing, because you learned so much from it. Does anyone else have a story around that they want to share?
It was challenging, and I stopped having an expectation that I would get recognized on merit. I really did. The word was being thrown around all the time. When I was at Smith Barney, going back, way back when, you had a powerhouse of guys. You had Jamie, you had Charlie Sharp, you had Mandelbaum. And then you had guys that weren't so impressive. And to be honest, I'd sit there and watch, I'm going to say mediocre talent in the male pool. And there was this phenomenon that happened, I think, in the men's room, because they would go in there and then emerge so much smarter in higher positions with much greater salary potential. That phenomenon did not happen in the ladies' room. I'm sorry, it just didn't.
Whatever happened in there?
I want to know what happened then. Now, how did that work, you know? And you sit watching that long enough, and you see mediocre talent promoted ahead of you. It made me work harder. It made me think of how to differentiate myself. Because I realized I was going to have to carve my own path. Little did I know it would come down to me becoming so disabled that I would have to rethink the trajectory of my entire life. But that pivotal moment I am grateful for, because while I was able to claw my way back to Wall Street, I've been able to create an incredible platform where marginalized individuals not just survive, but will thrive.
Thank you. That's, again, really moving. Now, this is more a little bit related to COVID and how you coped to keep your business going during COVID. What did you have to change about how you conducted business? And in going out into the next few years, how is this going to affect the way you staff or manage your business? I think people there might be interested in that. Carolyn?
Sure. I'll start. I think the biggest thing that I first thought about when COVID hit was, we have due diligence in particular is a high-touch business. And I was thinking about this yesterday, my first in-person event for, I had one in November, when the very narrow window that we had, but this is where we meet people. This is where we meet investors. And that event yesterday, I met an investor who I've been talking to on Zoom. First time we've seen each other in person. Anna actually met for the first time. We've been talking on Zoom for 3 years. First time today we met in person. But those are, and just running into people. Got 2 potential new managers I met yesterday at this in-person conference. So I think that it has been very challenging. But the first thing I thought about is how do you sort of reignite the investment process in particular. And in particularly, operational due diligence is a challenge. Where I learned about, in particular, the biggest issue that I came up with when I was first started doing due diligence on funds early on was Madoff. And the big thing about Madoff was that he wouldn't let anybody onto the floor where he was. So if you when they went in afterwards, they realized there's no way he could have been running billions of dollars with this infrastructure. So how do you think about doing that differently? And I really just went to every Zoom I could find that was talking about operations and how different investors were thinking about it. And so how are we going to do it now? It's going to be a hybrid in the end. We have to be really open to the idea that there are lots of things that we did in these meetings that we didn't have to do in person, and it makes it more efficient. But we do have to have the ability to be able to look around, to be able to make sure that the strategy lines up with the infrastructure. It's not going to be good enough for them to kind of put up the screen to kind of show you. So we have to, and you have to be willing to walk away. I think that's really the point, is that even before Zoom, you had to say, well, if a manager is not going to be helpful in terms of making me comfortable as an investor, then they also don't want me as a partner. So therefore, I should be willing to walk away, even despite whatever the returns are. So I think those are the things that I've sort of learned. I think it's just broadly.
I would agree. I think we lost something. I mean, when you've been investing with a manager forever, you don't necessarily need to go on site, right? I mean, but do your annual review, and that normally just makes, at least in my case, it just makes clients feel better rather than being 100% necessary. But when you're investing with someone for the first time, I think it was really, really difficult, both from an IDD, BDD or ODD perspective. I totally agree, and I'm so glad that we're now having manager meetings, because there's something different about. I mean, I flew last week down to a manager who was severely underperforming, because I just had to sit with her and say, like, all right, like, how much of a drawdown is too much? Like, at this point, like, could you just give it to me straight? And before that, like on Zoom or whatever, it's like everyone's IR person, and like there's a barrier, and you feel like you just can't sit with someone and say, just like, I'm not going to pull my money necessarily, but just like, tell me what's going on, like and the body language between people. It's like you just realize that there's nothing that's substituted on video for this, but it's not necessary 100% of the time. But the thing that I did during COVID that I'm proud about was that I said, I understand that everyone's very excited that we're not spending a lot of money doing on-site visits, but if you cut my budget and then I don't get it back in 2020, well, I thought it was going to be 2021, but now it's 2022, like, it's necessary. It was so stark around how necessary it is. And I had this Goldman analyst I was listening to, and he said, after 9/11, of course, airline travel went down significantly for business, he said, but you have to remember, he said, but it doubled, in sort of multiple years afterwards. And he said, at the same time, technology, video conferencing technology was being created. You could have easily done, but he said, human beings, especially when they're creating relationships, have human behavior, right? Like, you have to be sort of physically around someone. I really believe that. But in terms of my team and like, Fridays, people certainly work on Fridays, but I will never see someone in an office ever again on a Friday, and I'm not even going to try. And I think, I think it was the CEO of Microsoft recently had an interview, don't quote me on if it was Microsoft or not, but anyway, and he basically said, listen, the value of teamwork, right, and being in a team 1 or 2 days a week and working in a team, but we don't need to like work in an office 5 days a week. And I think that that's all the feedback that I've been getting from my 65 plus person team, underscores that. But I do think it's, I just think companies competing for talent, we're going to demand a 5-day work week. Especially for female and diverse talent, especially for female talent, I would say. That's a hard call to make as a business, I think, anymore. But.
I've always been supportive since I started the firm in 2011. I have 60 individuals around the globe in 13 countries. I have to trust the servants and clients in 23 countries. I don't have time to babysit them. I don't need them to do FaceTime. That's not important to me. I don't need them in the office. I need them servicing the clients. I need them putting revenue on the books, growing their book. My job is to support them and be their resource 24/7. Now, I also think we're in an environment, particularly for emerging managers, that you will, in order to scale, to compete, you will have to use a hybrid approach of technology and visits. You don't have unlimited marketing budgets to fly all over the world, to take 400 appointments with the hope of getting five investors. It's not a good use of your time or your resources. So technology needs to be used intelligently. It needs to be used tactically, strategically. And then you need to be able to capitalize on those in-person visits at that time because you have a much more likelihood of success of closing them. I mean, for us, technology was key. When I built the firm, I couldn't get a penny. I had to sell my own assets to come up with $3 million to build the firm. And the first thing I did is put it into technology. We were 4 people at the time, but I built the technology to scale to 4,000 because I felt if I didn't do that, I would never have a legitimate platform to compete. And once I did that, we were able to then put research out. Today we cover research on 100 Fortune 500 companies, Tesla, Disney, Coke, HP, General Motors, across all sectors. Our capital markets team, we have distribution of 30,000 accounts, 17.6 billion in AUM. All of that was built through technology. And then as an underwriter, we've been able to serve as co-manager in underwriting in more than 700 transactions with over $350 billion transaction value. Time Warner, Airbnb, Lyft, it just goes on and on. And when you're sitting down with issuers, technology matters.
Thank you, Cynthia. For our firm as well, I think, upping the game in technology is very key for a hybrid situation, and also very, very clearly defined processes around risk, around monitoring risk, around reporting risks, and good systems to track all of that. So during COVID, we already were pretty invested in all of this. We've added a lot of things, and I think that makes a big difference, especially for a smaller firm. We're just 14 people, and when we get more money, we put it into our systems.
Susan, I'd like to just add a little bit about some emerging managers and the new Zoom.
Speak up, you can't.
Oops. Can you hear me now? So basically, what a lot of investors, and I've been guilty of this as well, because they're at home, there's no traveling to conferences to meet managers. There's no taking a coffee break in the middle of the day. You're just sitting there going meeting after meeting, and what's meant for a lot of allocators is they're having a lot more meetings. That doesn't mean that they're giving out a lot more allocations. So I think use those meetings to build relationships, and also, and for some, even if it's a really high-profile investor, it's practice. They're probably not going to give money to you or your strategy. Maybe they're going to take the meeting because now because a lot of allocators do have metrics where they are supposed to say, I've had this many meetings with these kind of investors. So, they do it, so it's to kind of take advantage of that. It is so technology can help you get to investors that you wouldn't necessarily be able to talk to, but just so be careful about how you spend your time, because you can spend a lot of time with meetings and then talk about the percentage of meetings that actually lead to allocations. I would say probably that percentage of I think you probably need more meetings these days if we're in an era of technology in order to get an allocation. So just be mindful of that as you build your business.
That's great. So this last question, and then we'll open it up, is as you're looking forward in building your businesses, are you really optimistic now? You've all been, as women, and working in this industry of asset management for a long time, and still women are less than 3% of all asset managers. Are you optimistic about the future? And if so, please share your optimism with everyone here. And if you feel like things are kind of status quo, I think it's important for people to hear that as well. And we start with Caroline, because I know she's got some.
I would say I've been building a business based on optimism, I guess. I think I've been looking at the DEI space in asset management since for about 15 years. I mean, I was happy to work on what we thought was the first comprehensive survey of women and people of color as PMs in hedge funds, working with HFR. You can see they track it still, the diversity index on the HFR website. And at the time, I did it because I thought, well, then maybe this is an interesting niche. I didn't do it because I particularly had a thought around this as a really a space that anybody would focus on. But it's the outperformance that really took me away and how persistent it was. And for a long time, people weren't even thinking about it. But you would tell them about it, you say there were studies, and there'd be a moment, but they just stopped talking about it. But it's been, I feel as if we're in an inflection point, have been, and it's been sustained, the attention. There has been capital flowing into the space, but it is true with larger managers, but there's some managers that started in the last few years that are founded by women and people of color who have room. So the important thing is we really need to foster the talent, find the PMs that have the ability and the desire to launch their own firms, and then funnel capital to them, so that you can't, if you're $25 million, you're only going to grow at a buck at a time. I mean, you can never get there. But if you start out with $250 million, then you have an opportunity to, if you perform, to become one of the next unicorns in the space. So I am optimistic.
I had been optimistic, despite all the stats that tell you that you shouldn't. I mean, I think there's one thing around diverse fund managers and PMs, but then when you look at the fact that 98.7 rounding of all allocators in the U.S. are men, or all that money being allocated by men. I mean, that's pretty large hurdle to get over, and pretty well proven if you read how the sort of bias that creates in capital allocation land. But I was still somewhat optimistic. I did think that there was some good sort of maybe staying power this time. Maybe we wouldn't have just a month of the year that there was a focus on women that I had a bunch of panels on because I'm the only woman allocator in my peer group. And then the last week with the geopolitical, I mean, I also do a lot of work in sustainability and impact investing as sort of a research focus of mine. And the last week with the complete geopolitical shift in the world, and people's focus are going to be on other things, inflation, energy prices, blah, 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 blah. I worry. So I don't know if I'm pessimistic yet because it's a weekend, and but those large shifts tend to take people's focus off of what unfortunately I think is still considered, I don't think this, but I think it's still sometimes considered a soft topic by the people who run the world. So that I'm worried, I will say. Not to end on a
Let's
whatever.
move to sentence.
There's no question there's a lot more talk today than there was when I started in the 80s. However, we are so far from anybody being able to put on their sneakers and do a victory lap around this, because we as a culture, we don't really appreciate diversity of thought. We don't. If you really understood diversity of thought, which is the final frontier of diversity, you would understand that diversity of thought drives your P&L. It drives innovation. It allows you to be competitive in your peer group. Unfortunately, D&I is still looked as we have to do it, it's morally right, until we get past that, right? And really look at, it's just good business, for God's sakes. How hard is this? We're all good at numbers, that's why we're in this business, but yet the numbers are slapping people in the face and they can't seem to digest it. So we have a lot of work to do as a community, right? I don't think it's an ecosystem. If we don't make it, whether it's in financial services, whether it's in the banking side, the broker-dealer side, the asset management side, there are much bigger consequences here, my friends. There are diverse investors who will never have their seat at the table either. And that is the tragic part of this. We represent those investors. This is bigger than any one of us. If we're in it because we think we're going to be successful as a diverse firm, that's great, but you better be in it because you represent an incredible stakeholder community.
I'll say some positives. We work with endowments and foundations, and their outsourced chief investment officer. And for the first time, every single one of them is looking at their investment policy statement and thinking of ways to incorporate both ESG concerns, Anna, as well as diversity, equity, and inclusion. And it is serious, and they're putting it in the IPS. And when the impetus comes from the board, it comes from the employees at the endowments and foundations, it comes from the students at the schools that are also driving this dialogue. So there's a lot of groundswell for this to be in portfolios at the endowment foundation level. So I've been doing this job as an allocator for about 20 years, and it is really a change. It is. And I don't think that we can see this. I know we need fossil fuels. Well, we've always needed them. And I think there needs to be a more realistic dialogue about the slow progression of fossil fuels to other renewables. And before it was all about now. And I think now we are understanding that it can't be now, but it's going to be over time. So I hope that all of this leads to more rational discussion, and it certainly will make people aware that they should be a little thoughtful about how grateful they should be in America.
With that, why don't we open it up to questions? There's a mic that's going to be going around, so please wait for the mic. I'll ask a question.
But I'm curious, there is a number of funds now that is interested in investing digital assets, and you know, one of the challenges I think is the infrastructure behind it. Sometimes there are lots of innovative ideas, but the question from an operational standpoint, the standards may not necessarily be the same perhaps as what you would expect from a traditional manager. And I was wondering, as allocators, how are you dealing with this type of situation?
Is it a question around funds that invest in digital asset, based technology, or who are transacting in? Yeah, I mean, it is while we're not necessarily allowing clients to open up Bitcoin accounts, and cryptocurrency, I think, is something, for instance, we're still watching, and obviously the SEC has approved, futures funds, et cetera, et cetera. There's a very large ecosystem. Crypto gets so much airtime. Bitcoin gets so much airtime. But as an investor, what we're really interested in is actually the ecosystem and blockchain and sort of how digital, how blockchain and sort of related technologies are going to transform the way that transactions happen, contracts happen, and basically every sort of process and contracted, in the right is probably going to be transformed. So we're looking at it through that lens, and we're looking at funds that are both diversified and have that as a theme, and have a team of experts that understand that and are investing. We're also haven't allocated yet, but looking at sort of just straight plays in that space. So I think right now the regulatory environment is sort of there's a question around share classes that are crypto based, and there's like so structural, right? I think there's some jury out, but the investing in that space is, just like any sort of not normal, but any technology investment where you're sort of investing for the future transformation in any sort of sector.
Yeah, we're allocating to the pipes is the way we refer to it. Just like you have exchanges or other stuff, we think they're going to be, we see it with Coinbase. So we're investing in some of that venture stuff on that side. That's where the real opportunity is right now. And then the pipes, transferring the technology behind it. And there are some ways to arbitrage it. So we have funds that do a piece of that within their portfolios. But I think you have to have some of it in your portfolios today. And so we are allocating with clients to that space.
So the interesting thing, and just on topic, is that a lot of women, so there's a woman who just spun out of Andreessen Horowitz who's running fund. I think she's going to be fine, right? But don't take one woman who literally has like an extreme background in expertise who's raising a $1 billion fund and be like, wait, women are totally represented in the digital transformation. They are not. They're not. That's something that we have to really, as allocators and fund, be really cognizant of, because in technology-based transformation in all of these sectors, it is investments are going to men. And as allocators, we really, really, really have to be focused on both women and diversity, because it's not that they don't have good ideas and are not technologists. So I would say it's sort of shocking already how the capital is flowing. And actually there's an interesting network of women that was just formed called BFF to think about how women can still have a place in the Web 3.0 and that world.
And I don't want the men in the room to think I am anti-men. And as a matter of fact, I love men. I've been married to several of them, not all at the same time. I do feel women struggle and minority firms, despite all of the mandates, implicit, explicit mandates, there is still a struggle to get allocation. And we lose, on average, 700 to 1,000 emerging managers a year, while it's kind of like a net sum zero when 750,000 come back on the platform. But the fact that there's such attrition tells you there's a problem, because we're not losing women and minority managers because they're not talented. We're losing them because they run out of runway, right? The costs are increasing. In order to run their business, they can't scale fast enough. It's one of the reasons when I started Rise Prime, and I realized there was not a diversity prime in the country that was mission-driven and about inclusive investing, providing democratized access to capital. I created this platform and brought on an incredible patented technology. Lisa Vioni has the only patented technology.
Another board member of High Water Women, by the way.
Incredible woman, incredibly talented woman. And I I know her for decades, and I reconnected with her, and I saw this technology, and I fell out of my chair, and I'm like, Lisa, I need to buy a piece of this. I need to own a piece of this technology and put it inside of Rise so that we can offer this technology to women and emerging managers. And we made a decision this week that all women and emerging managers will have access to our technology, which has 5,000 allocators on the platform. And you will have access to it for, if you have less than $500 million, we will give you 9 months of runway on our platform without any charge, commitment, subscription. You don't even have to do soft dollar trades with us. If you're between $500 million and $1 billion, you'll have 6 months on it. And that's our commitment to pay it forward to women and minorities, because we feel with this type of technology, we're positioning you to be successful. We do have one ask, that you pay your dues to NASP, Rainbow Push, and pick one other organization like High Water Women. You need to pay it forward, as we're going to give you something of value.
Thank you, Cynthia. We appreciate the donation, High Water Women, and we will be reaching out to you. Caroline, do you have anything to add?
She took my thunder. I was going to figure out a way to make another plug for High Water Women.
And Caroline's also involved.
Not a board member, but co-chair of the Gender Diversity Lens Investing workstream, I guess we call it. But what I did want to say about VC, just adding on what Anna said, is that it is dominated by men, but I've been amazed recently how many women are involved at the small fund stage who are growing businesses in VC. I mean, I think if I think about the different asset classes in alternatives, it's probably in venture, where it's the most fertile, where you're seeing so many women starting own firms. And there are a lot of guys that are taking notice of it. I mean, Harvard's endowment is not doing anything in the DEI space right now except in VC. So I think for VC investors who are diverse investors in VC with those kind of strategies, it's a really interesting time to be looking at. And anything within, from technology and digital assets to consumer and everything in between, that's a really fertile space.
Great. Any other questions?
Yes. Yeah. Thank you very much for sharing all of your stories. I really found them all, in different ways, very kind of inspirational as a rule. My question really is about women in financial services kind of in general, right? So the issue of women in all industries or all professions over years has changed. Other professions, I think, have done a much better job of that. If we look at the medical schools, I think it's probably about 50-50, 52%. I think law schools now trend about 55%. Business schools only trend towards about, I think, 40% now. That's the high mark, of women attending these kind of schools and professions. So other than the obvious of, we need to promote more women, which of course, and I think the message is out there, how do we attract, or what is the message towards attracting more females into financial services as a whole? And what are the things, boots on the ground type of things, that companies, large scale, small scale, and everything in between, need to start implementing to kind of push that messaging across?
I'll address that. Look, one of the issues is they hire a lot of young women, and they have a token woman at a senior position, but there's nobody in between. So when a young woman is starting to be harassed, which happens, and I can list the brokerage firms that are doing that today, there's no woman a young woman to appeal to, and HR doesn't care. So what the women do is quit and go somewhere else, okay? So sexual harassment is a huge issue on Wall Street still today.
There's some staggering data out there. Between 2000 and 2010 alone, according to the Department of Labor Statistics, 110,000 women left Wall Street. while during that time, the ranks of men increased over 320,000. So these women didn't leave because the jobs weren't there. Why they went, what it took to stay there, and why they left was a unique story for each. But the common thread among this 110,000 women were lack of balance in their work life, lack of real projection of opportunity and growth in the industry. They saw the ladder, but they saw the rungs were off the ladder. And many of them left to start their own companies, simply because they got tired of making rich men richer.
I think there was a panel at the last G7. I'm not going to try so hard not to name the managers that were on it, but you can look it up. Anyway, so one of the managers, who's a very large manager, let's call it one of the largest managers in the world. I guess they were asked about women and diversity, and it encapsulated like everything that it's just an amazing quote, and I'll tell you why I think so. Because he said that he had figured out why women, they had trouble both attracting and retaining women at this firm, and it was because they were scary. And I read this quote, right, that he had figured out that it was because women thought it was too hard and it was too scary. And I read this quote, and I literally, like, just my jaw dropped, because I was like, this is the interesting thing with culture on Wall Street. Women like to be competitive. Women like to win. Women like complex situations, environments that are competitive. They don't like to be in a company where you're treated like you are, where the culture is that it's so toxic, and so the competitive Nate is so masculine, right? The orientation is so masculine in the way that competition happens, right? It's the, as Cynthia just said, it's the, like, I got off the plane in Asia, I showered, and then I got, did my 10 hours of meetings, got right back on the plane, and that makes me the coolest person ever, and I never take a vacation. And women are just like, why would you live like that? Like, I have other things that I want to do with my time. And so it's the definition of what is a competitive environment, or it's the culture. It's hard to describe, but it's this, like, you don't have to live in a culture like that to win and be competitive. And I think people are starting to understand that a little bit more. But I really, it's one of those, like, and culture is, it's so something that gets tossed around so much in talking about, culture eats whatever for strategy for lunch or whatever the phrase is. But it is really that. It is because it's what you're it's the type of what does success mean and who's modeling success, and that's not attractive for women in a lot of these organizations.
The playing field was never level, right? So I learned that, and I had this gentleman that I reported to back in the day at Smith Barney, and I did all the work. He put his name on my work, and he was always presenting my work. So I decided one day I was going to pull a slide from my presentation. And I used to go to the meeting when he got to sit in the executive room and present. And I pulled the slide intentionally and gave him the deck. And he went through that deck, and they got to the questions started flying. And he was like a deer in headlights because he couldn't answer one question. And I finally stood up and said, I can answer the question. And they were like, you can answer it. It was almost like, who dug her up? And I said, yes, I can answer the question because I produced the deck. It's my work product. And I answered it, and he was so angry at the end. And I told him I had no choice but to do that because he was never going to create a pathway for me. So I had to prove it in spite of him. And, I'm glad I did it because I knew he was never going to open that door for me, but that was a game changer for me because I didn't have to report to him after that meeting anymore.
Yeah, I'm optimistic about maybe DI, but I'm not optimistic about changing the culture of Wall Street, to be quite honest. I think that, look, a work environment should not be toxic. It should not be an environment in which you are, harassed and abused and all of that. I think that's off the table regardless. But it is, I think, I've never thought that this business was ever going to be female friendly in a sense. I thought it could be welcoming to women in terms of in their skills, but it was not going to become it was always going to have a male tinge to the culture. And I think that does mean that there are people who will be attracted to it and not. It doesn't work for everyone. But in terms of trying to bring more women into the business, I think one of the first things is they have to see it to be it. So it is incredibly important for all of us to be kind of very out front role models for women in the space. Show them, demystify what this looks like. When I was in college, I was an economics major, but all the guys that I knew were off going down the road. My college did not offer accounting. So they were going down somewhat secretly amongst themselves, no one told me, down to another college to take accounting. I was kind of, I was supposed to take accounting? I didn't really use if I could just bank. But I think that if I had known, I would have taken it. So I think we have to be upfront with women, with younger women, and saying this is the pathway. This is what you need to do to get prepared. This is what the business is like. This is kind of demystify it so that it is. I think it's fascinating. We think it's fascinating. I think it's really interesting. So I think that's a really important way to bring more women into the business. And I also think, and Susan touched on this, it comes from the allocator side. That allocators have to. There's a trustee in the state of Connecticut who told this story, which I love it. She did it years ago. She said there was a junior woman, and they were presenting to the board for an investment, and they asked her that this trustee said to the white man who was presenting, so what about what are you doing to promote her? You say she's here, so you must think that she's good. So what are you doing to promote her? What's her pathway? And I think those kind of questions, and now you see surveys at foundations and endowments, and as well as the EEOC forms that you see for pension plans for a long time, where they not only have to list sort of the percentage of women or the percentage of ethnic with diversity in their staff, what parts of the business are they in? What level of the business are they in? So from the investment side to the middle office to the back office, it's now on paper. And if you don't have a policy to move some of those junior women into more senior roles, then I want to see a plan. So I think from that, those are the two ways which I think that people can sort of make sure that we don't die out.